here's what we're seeing. We're seeing some mortgage losses surging. We're seeing layoffs. We're seeing some really interesting things happening. Again, I don't think that anyone should be worried. I think we're seeing a lot of, I'm hearing a lot of people trying to stoke the fear. And there's an old saying. And that old saying is when when everyone is fearful, get greedy. When everyone's greedy, get fearful. So in this case, everyone's getting fearful. What I think we're experiencing, yes, there's going to be some layoffs, there's going to be some shifts in the labor market, but what we're going to see is an eventual decline. The Fed has said the big thing is the Fed rate. That's like the big thing, because the Fed came out and said, "Hey, we're not going to for sure cut the rates as fast as we thought we were, but that doesn't mean they're not going to cut the rates. They're going to cut the rates." Um, and basically, what they're saying is they're just going to slow it down, even though they're also saying that they won the inflation fight. So the Fed saying that they won the inflation fight means that they're going to start cutting the rate again, which means it's going to stimulate the economy. Banks are There's a nuance with the banking crisis. Okay, we saw the banking crisis with SVB. We saw the banking crisis with First Republic and some of these weird tech sector banks. There are officials saying that that is not over. We're going to see consumer bank. We're still going to see some consumer bank issues. However, when the Fed starts cutting the rate, the liquidity is going to increase. We're going to continue seeing inflation. The Fed here is saying, "Oh, they won the inflation fight somehow," which is completely, that's pretty ridiculous because, I mean, everyone's feeling the effect of inflation. But according to the Fed, that this means that they're ready to start cutting rates. Now, something happened, and they said that, "Oh, we're not." It was an 80% chance of cutting the rate 6 times this year. Now it's only a 50% chance. Well, what does that mean? They're still going to cut the rates. Maybe it's not going to be as many cuts. Maybe it's not going to be as big a cuts. Okay, but there's still going to be rate cuts. It's going to reduce, mortgage rates are going to come down. It's going to stimulate real estate. Yes, there's a monsoon of commercial debt that's going to get pretty ugly. But for the average consumer, we're going to see the real estate market probably heating up a little bit again. Yes, you are going to pay more, but there is a potential. Prices are already starting to go up, and there is a potential that what could happen is that the prices are going to go up, and they could continue rising. Once the Fed cuts the rates again, we're going to see inflation continue going out of control. Now, there's balancing factors like the mortgage losses. Okay, so there's an increase in people who are defaulting on their mortgages. This means that there's job losses. There's more impact to the banks. The banks are going to get hit. They're going to hurt a little bit more with all these defaults. But when the Fed starts cutting rate, that's going to take a little bit of the pressure off. So the pressure is going to come off a little bit when the Fed starts cutting rates. The banks are still the smaller regional banks. They're still experiencing this phenomenon where they had this a loss of consumer confidence essentially, and they have a liquidity crisis. That means the big banks are going to start monopolizing and kind of conglomerating these little banks. And once the rates come down, we're going to see this kind of like battle of forces, right? One is going to be liquidity. We're going to see greater liquidity like we had in the past few years before the rate started going up. And then we're also going to see a lot more tightening from the banks because they're going to be a lot more stringent. They're going to be a lot more kind of scared to lend. We're going to see tightening regulations on lending. So it's a really interesting time. And I'm not one of these crypto conspiracies guys who are like, every day for the last 10 years they've been talking about the government's going to switch over to a central bank digital currency. But we did see Fed Now Servicing go live, which is real-time Fed payments. What does that mean? It means that money is now moving at the speed of light 24/7. It's not like the old school days of the bank. We're seeing the banking system start to transition over to the system that's more similar to what you're seeing in cryptocurrency, which is that you have trading 24/7. Similar markets, the stock markets, the forex markets, the foreign currencies, those trade only 5 days a week, but the crypto markets, they trade 24/7. So we're going to start seeing this transition into a global digital economy. This is a huge kind of transition. We're also looking at the emergence of BRICS. Now, guys, if you don't know what BRICS is, this is, uh, Brazil, Russia, India, China, South Africa. They're forming their own alliance because they have, they do a lot of trade. They're trying to counter the economic effects of our, the U.S. dominance in the financial system, and now we have Saudi Arabia potentially joining this effort of globalization. They're going to be creating their own, they have their own impact on global economy. The U.S. is not going to have a choice but to play along. I mean, this is a major shift in global power. So this is happening. And the other thing is AI. We're seeing a big emergence for the need of AI, but people are afraid that's going to take away jobs, but it's actually going to create a ton of opportunities in in tech, higher paying jobs in tech, more opportunities. So if you're into that, I mean, this is something to look into. You can see Mark Zuckerberg is already, spending billions of dollars on AI chips. This is, the tech sector is going to continue to boom because there is going to be a lot of expansion. So it's an interesting time, right? Like anyone who says unequivocally, the economy is going to crash or the economy is going to boom, it, neither of them are right. Okay, what we're seeing is a mix. We're seeing a mix of reactions, of market reactions in certain areas. We're going to see layoffs and job losses in certain areas. It's going to affect certain markets. It's going to affect certain players in the space. We're going to see an increase in demand in certain job sectors. We're going to see salaries and wages continuing to rise, as well as, we're seeing the suffering of mortgage losses and the kind of the banking collapse that we saw last year. There's going to be fallout from that. So we're kind of seeing this huge change and transition of of power, of the financial system. We're really witnessing this global world order kind of coming together. The impact of that is obviously going to be, um, there's to me, I think this is a time of unprecedented opportunity. Find a way to get ahead of this. I mean, there's so much opportunity when it comes to AI, investing, cryptocurrency, technology, so on and so forth. But I do see that if the Fed believes that they're winning this so-called fight against inflation, that they're going to start cutting rates. That's going to start flooding the markets with some liquidity. Of course, the banks are the ones that are going to tighten their restrictions a little bit. Might be a little bit more difficult to get loans for certain people, and then we're also seeing the conglomeration of data, right? So information and data is accessible about people and their financial situations, their informations at an unprecedented rate. So it is quite an interesting time. But the main point that I want to stress here is don't buy into the fear, don't buy into the panic. Understand that things are always changing, and with change comes opportunity. So you have to have a mindset of looking at what's changing, looking at what the opportunity is, and figuring out how you can capitalize on it. And this is really what's going to set you apart and give you, basically give you a new place in this opportunity where we're seeing changing world orders. We're seeing new opportunities. We're seeing things that are emerging, clean energy and AI that have never existed before. It is going to reshape the landscape of our lives. It is going to reshape the landscape of the financial system. And so, but there's nothing to be afraid of. There's unprecedented opportunity. Yes, you need to be careful. You need to be very prudent in your due diligence. If you're investing, if you're putting money in certain places, and understand that, if you follow sound principles, buying assets, avoiding spending unnecessary liabilities, that you can continue to thrive and grow in the coming economy. So that's pretty much the core of my message here. I'm going to leave it at that and hope you guys have a great night.